Hi, welcome back to Fi News. And before we dive into today's topic, don't forget to subscribe to our channel for latest in finance, tech, AI, crypto, and global affairs.
All right, let's talk about a real high-stakes gamble. We've got one man, his software company, and this massive multi-billion-dollar bet on Bitcoin that is, well, it's really facing the music right now.
So that brings us to the big question, right? Bitcoin's price is taking a nosedive. So is Michael Saylor's entire strategy for his company, MicroStrategy, about to just collapse? I mean, this is the question that has all of Wall Street on the edge of its seat.
And the pressure is just immense. We're talking about a 35% drop for Bitcoin from its recent peak. Now, for most companies out there, that's just background noise, you know? But for MicroStrategy, oh no, this is a direct hit right to the core of everything they're doing. So to really get why this is such a big deal, we gotta look at how MicroStrategy set itself up. See, this isn't just some company that happens to own a little Bitcoin on the side. No, their entire identity, their whole reason for being, has become this turbocharged bet on crypto.
So what does that even mean? A turbocharged bet? Well, Michael Saylor basically took his regular old data mining software company and turned it into the single biggest corporate owner of Bitcoin on the planet. It essentially became this go-to stock for big money investors who wanted a pumped-up way to get into Bitcoin without buying it directly.
And for a good while there, man, this strategy paid off like you wouldn't believe. It was spectacular. Investors just piled in, driving the stock price way, way higher than the value of the Bitcoin it actually owned. At one point, that premium hit a crazy 190%. It was the ultimate play in a bull market. But what happens when the party stops? When the market turns? Well, that supercharged engine that was driving the stock, it's completely stalled out. And that famous premium we were just talking about, poof, it's gone.
And the fallout from that? It's been absolutely brutal. MicroStrategy's stock has crashed 60% in just a year. This isn't just a little dip or a correction. No, this is the market fundamentally rethinking what this company is even worth.
I mean, this really shows you the whiplash here. The company went from being worth way more than its Bitcoin holdings to the exact opposite. Now, the market is saying the company is worth less than the Bitcoin on its books. That premium didn't just disappear, it flipped into a discount. Wild.
And you can bet Wall Street has noticed. S&P Global slapped them with a junk credit rating. JP Morgan came out and warned they could get booted from the NASDAQ 100. And their dream of joining the big leagues, the S&P 500, yeah, that's pretty much off the table now. You can feel the walls closing in.
So, this brings us to Saylor's next move, what he's calling the credit as product pivot. Now, you might think he'd be backing down, right? But Michael Saylor, ever the Bitcoin evangelist, is doing the exact opposite. He's not retreating. He's going on the offensive with a brand new and pretty radical strategy.
And this quote from him just nails his new vision. The credit is the product and the equity is the afterthought. He's basically telling everyone, hey, forget about our stock price. In his mind, the company's future isn't about being a simple tracker for Bitcoin's ups and downs anymore.
So, what's the new plan then? Well, it's to build a whole new market of financial products. You can kind of think of them as these instruments that use the company's mountain of Bitcoin to create a steady income stream, a yield for investors who are just plain tired of the crazy crypto roller coaster. And how they're doing it is pretty interesting. They've launched this whole menu of special stocks, preferred stocks, with these names that honestly sound like they're from a comic book, right? You've got Strike, Strife, Stride, and Stretch. Each one promises a different, juicy dividend, and it's all backed by that big pile of Bitcoin on their balance sheet.
But here's the real kicker, the secret sauce, a huge tax advantage. See, for investors who have to pay taxes on their gains, these dividends are treated as a return of capital. What that means is they don't get taxed like regular income every year. So the actual effective yield you get is way higher than you'd find on other similar products.
Okay, but let's be clear. This big pivot, it's not some safe haven. It's a whole new gamble, and it comes with its own very serious, very unique set of risks. It's almost like Saylor's just swapping one high wire act for another.
And here's the crazy irony of the whole thing. The very problem this new strategy was supposed to solve, to Bitcoin downturn, is now squeezing these new products. As investors get more and more nervous, the prices of these special stocks are starting to drop. And you can see that effect pretty clearly. When the price of these things falls, the yield, the percentage it pays out, goes up. It has to attract buyers. For example, one of their new stocks launched with a 10% yield. Now, it's up to 12.5%.
That rising yield is like a big, flashing red light that signals investors see more and more risk. And the stakes here? They could not be higher. You add up the dividends for all these new stocks, plus the interest on all their other debt, and MicroStrategy now has to pay out something like $700 million every single year. That is a gigantic amount of cash to burn through, especially if we're stuck in a long Bitcoin winter.
So, it all comes down to this one question. Is Michael Saylor's big pivot a financial masterstroke? Is he creating a totally new, resilient way to play the crypto market? Or is this just a desperate, last-ditch gamble on borrowed time? Is he just doubling down right as the storm is hitting? Honestly, only time is going to tell.